Hi, today we are going to discuss about how to claim the withholding taxes which have been levied on the dividends issued on the shares of foreign companies. Welcome to Shri Management channel. I know this has been a tough concept, and then also it's really tough for people when they are filing ITR2. I'll try to make it as simple as possible with detailed examples. And due to the nature of being complicated concept, I made it two different videos. First video, we are going to talk about the concept with an example, and there is a follow-up video. The link of that would be given in the description for how to file this in ITR2 itself. Let's look at it in detail.
So we are going to explain this process now. The double taxation avoidance agreement is something that allows us to claim the refund of withholding tax that has been levied at a foreign country. And this process is called foreign tax credit refund. We can use either section 90 or 90A depending on whether India has a DTAA agreement with that respective country or not. And the good news here is India has DTAA agreements with majority of the countries of the world. So let's look at an example with a German company. Let's say that you are receiving dividends on shares issued by a German company. First, the level of German company withholding tax would amount to 26.375%, which will be levied by the company before giving you the rest of the dividend amount. And second part is that the gross dividend will be subjected to Indian income tax as well at your own individual tax rate. So here, the DTAA agreement will allow us to claim 10% of that dividend paid in a foreign country, which is Germany here. So the residual tax, which is withheld 26.7375 minus 10%, which is coming to 16.375, is something which we can claim by filing it in ITR2. And there are various sections which you have to keep in mind while filing this in ITR2. They are going to be the income from other sources and declaration of the foreign asset and the declaration of the source of income. And finally, the tax refund statement in the tax refund schedule. And we have a separate form called Form 67, which has to be filed outside ITR2 and capturing the tax computed with respect to details. Okay, good. So we are going to look at this with detailed example having numbers. In the example on the screen, you see this individual employee is getting a gross dividend of 142.87 euro. I have taken an exchange rate of 85 and then provided all the values in Indian rupees here for the sake of convenience, and these are the numbers we are going to use when we are filing ITR2 itself. And then there is a commission and other charges. The subtotal is amounting to 37.67 euro. And the net dividend, which is like 142.87 minus 37.67 euro, is resulting around 105.2 euros. And so if you see here, the tax implication section in the table below, this on the German side, there is a tax which has been levied at 26.3%. So this is 3201, which is $3,201.95. This is something is withheld at the German company side. And there is a tax payable as well on the Indian side, where the dividend is taxed at 10%, which is amounting to 1214.395. So the total tax relief in this case is 1990, which has to be claimed while we are filing ITR2.
Thank you. So we will have a follow-up video on this. The link will be provided in the description. Do watch that, how to file the ITR in the system. Thank you, and don't forget to subscribe.